Hey, what's up, guys? This is Andrew from Dividend Growth Masters, and today I want to talk about an important topic, especially relating to investing in general, but for dividend investors, and it has to do with company guidance. So, company guidance is very important because stocks stocks can typically react very violently to company guidance, especially after they report earnings. So, I kind of want to go over what guidance is and how it applies to dividend investors. So if you pull up the press release, the earnings press release for most companies, that's where they will have something about the company guidance. They'll also typically talk about it on the conference call. So here is Apple's Q2 results for the second quarter 2019. So they're talking about the results here, but what we're really interested in is the guidance right here. So Apple is providing guidance for Q3 2019. They're guiding for revenue, gross margin, operating expenses, other income, and their tax rate. Now, companies can provide guidance on pretty much any metric they want. They can provide guidance for backlogs, subscribers, profits, gross margin, revenues, bookings, pretty much really any metric. So it really depends on what company or what industry the company is in. So we really have to pay attention to their key performance indicators, KPI. Now, the reason why guidance is important is because it sets expectations for the next quarter or for the year. Companies typically provide guidance for either the next quarter and or for the entire upcoming year. Now, the reason guidance is important is because a lot of stocks are closely followed by analysts, and these analysts publish their own estimates of what they expect revenues and profits and all those metrics to be. And if the company provides guidance below those expectations, it could cause the stock price to collapse, or if guidance is better than expected, then the stock could rip. So the dividend investor guidance in the short term, it's generally not as important to the overall picture, but it could cause a lot of volatility with the stocks that you own. Long-term guidance is pretty much, for the next quarter or so, it's really not that important. But like I said, guidance could be a factor in the short-term price movements in the stock. So if you see a company guide down for a specific quarter or for just the next year or something, and a stock price collapse, it could provide a good buying opportunity if nothing has changed in the long-term outlook of the company. So that's basically an overview of what corporate guidance is. It's kind of a hot topic today, but I don't want to get too deep into that. It's just something that exists and something that you really have to work around.